Hey traders, welcome to Charts and Coffee. Happy Friday, everybody. We do have some hot zones coming up this morning. So if you haven't already checked out the economic calendar, Econo Day, Forex Factory, this is trading economics. And you'll see I've got a list of sites that we use very regularly in the Sector Secrets Mastery. And I thought, when I'm referring to some of these data points, when I'm referring to some of these hot zones and measurements, these are the sites we use. They're all free sites. There are oftentimes subscriptions associated with them, but you don't have to use them. They're great sites. You'll see that there on the left side of the screen. And we're taking a look at trading economics. So what really pops out here is that at 10 a.m., we're going to get a whole host of University of Michigan data points. The one that I would recommend watching the most, anything with inflation. Take a look at this, Michigan inflation expectations. There's a lot of data there. I mean, obviously all of it will be considered, but probably none more so than that Michigan inflation expectation number that's coming out at 10 a.m. Eastern. So what do you do with that? If you are day trading, that means we've got a 30-minute window between the bell and this bit of data where some volatility is going to kick in. If you're looking for an entry, let's say it's 9:40, 9:45, 9:50 a.m., and then all of a sudden you're thinking, this is kind of close to that hot zone. And maybe the hot zone is going to be what closes the distance to my trigger, to my entry. And that's where you want to use data like this. If you're thinking about managing risk, if you're thinking about optional targets, optional scale outs, again, remember that time is a big part of not just trading in general, but especially important in day trading. So if you're not thinking about that clock, whether that be the day trading clock, which is that normal rhythm of the day, every session, or then on top of that, the hot zones that are coming out each day, be aware of that. We have 2 p.m. today. So that'll probably affect the second half of the day and possibly the close, whatever it is that Goolsby is going to be saying at 2 p.m. So keep an eye on that economic calendar that we have there. And that is listed here. You'll see tradingeconomics.com for a hot zone. What is a hot zone? A hot zone is a scheduled high impact event, right? What is on the calendar that we know is coming? And by the way, what are hot zones? FOMC is a hot zone. Any of the speeches are hot zones. Earnings is a type of hot zone. So check out the different calendars and you'll see I've got my hot zone calendar for earnings as well over at Estimize. Okay, so let's get to our charts. Let's jump on over there. And if you have any questions, as always, feel free to type them in. And also, if you want to learn more about how we use these hot zones, how we use these different links in the Sector Secrets Mastery, come check out what we're doing. You can check out what we offer over at sectorsecrets.com. All right, let's get to it. I'll keep an eye out for any questions. Good morning. Good morning. All right, so where are we as we kick off the morning? This will be, again, FOMC week. A lot of thinking about what Powell said and what that ultimately means about rates has been happening. What's really been interesting about any time that we're in a window, as we are right now, going into some sort of monetary policy shift, in this case, the hikes to hold to eventually cuts, there's going to be a lot of post FOMC, so meaning Thursday, Friday consideration about, well, what did he mean? And what are they really going to do? And how does the data support it? And you can see a lot of that hesitation there, even though we did punch up to a higher high, maybe barely yesterday, we're still in a bit of a holding pattern, but it's a holding pattern that's still very much within the context of an uptrend on both the S&P and the NAS. I will say though, and this is just the reality of high concentration weighting, when we have one or two names having disproportionate moves, and think about what's weighted in the NASDAQ that could be keeping the NAS maybe more bullish than it is if we were to back those names out. Apple has made, not only is it a high concentration weighted name, but it has made outsized gains this week on the heels of the keynote from WWDC. When Apple moves from about a buck 95 to 220, and it's weighted as heavily as it is in this 100 stock group called the NASDAQ, it's going to have a lot of influence there. Also, think about the fact that we're preparing for two other splits that are weighted in the NAS. AVGO. AVGO is heavily weighted in SMH, and it's going to have a lot of influence in the NASDAQ. And this might sound like a quirky one, but Chipotle as well. Heavily weighted in consumer discretionary, which actually is a top 3 sector in the NASDAQ, right? Now, what's in consumer discretionary? Amazon and Tesla. So when we understand those weightings, we want to keep an eye on that. All right, great question from Dave. All right, let's jump on over to that. And Dave asks, might there be a Pitbull low today? So for those of you that have never read Market Wizards, please do. Excellent read, very aspirational, and if nothing else, it's just a fun read. And there's a trader in Market Wizards whose name is Marty Schwartz, and his nickname in the pit was the Pitbull. And Marty Schwartz was the one that, I don't know if he created it, popularized it, I don't know. The longer I'm alive trading, the more I realize nothing's really new, right? So we just find ways to take advantage of certain phenomena, rhythmic, calendar-based phenomena in our trading world. And one of them is that and I look at it, Dave, I look at it really in a window between Wednesday and Friday. So that Friday, I believe the Pitbull strict interpretation is Friday to Monday is typically a bullish window going into the third Friday of the month, which is that OpX. This isn't just any OpX, right? Every quarter we get the big one, and that's the triple witching. So not only are we going to end the quarter this month, which is a very different beast than ending a month, we're also going to get the expiration, the triple witching expiration next Friday. Now, the Pitbull low is a monthly thing, but we're just talking about the quarterly impact. And by the way, if you're wondering about sector rotation, that's going to be far more impactful typically at the end of a month than at the end of a quarter, a month like this, than at the end of any old month. But that being said, that's there, Dave, but like anything, including say seasonals, there are tendencies. So right now, we're probably going to see much more influence from, does Apple keep moving higher, keeping the NASDAQ and the S&P up? Do we continue to see that strength in ABGO, et cetera? That being said, we could definitely argue that this is the window for the Pitbull low. And if we are going to find support on the S&P, it will likely be in this area between about 54 with a kind of a midpoint around 53.84, all the way down to 53.68. Those levels should hold as we go into next week. And I say should, not in any kind of predictive way. They should if we are to keep a bullish bias about what's happening right now in the S&P. So I would definitely keep an eye on those for potential support levels, certainly within the context of the uptrend on the daily ES futures. Dave, I would also look at those as potential buy the dips for swing trades. All right, so for those of you that are wondering, okay, Raghee, if we're going to do a swing trade, what exactly is that? So a swing trade would be something where, and this is what we teach in the mastery, right? So what we do is we look at a trade that we are going to, one, keep overnight, most likely. Two, we're setting up on a slightly longer time frame. I don't look at swings on a time frame any shorter than a 1 hour. And typically I like the daily. I'll favor wherever the trend is. Because remember, the 1 hour doesn't have to be in a trend if the daily is. That's that specificity of time frame where we have to pick a time frame, right? I'm not looking for multiple time frame confirmation. I'm looking to see which time frame has the resilience and the support and the trend. So that being said, the window's about 2 to 10 days. So that's not to say I'm going to pull it after 10 days, but I want to keep in mind that the potential lifespan of that trade, the time horizon, could be in that 2 to 10 day window, most especially if you're using a daily time frame. Okay. All right. Nacho Wu asks, well, can we take a look at Google? Of course. All right. Question is daily Google, thinking of buying the 172 calls for July when Google approaches 173. 3. All right, so Google's been trying, not there yet, it has been trying to reorganize into an uptrend. So because of that attempt, but failed attempt, I really should not focus on the mean reversion. So that mean reversion is not really that 173 area. That's not on really on deck for me. However, I mean, certainly keep an eye on it. Maybe it might, if and when it gets there, be something that could be set up on a short-term swing, which is usually about 1 to 3 days on the 1 hour. But for Google on the daily, right, I'm gonna at the bell, by the way, we'll get the new daily price movement range for today for Friday. And if that daily price movement range is aligning somewhere around that 173 area, absolutely. I love that you're waiting for a pullback. Nacho Wu, I love that you're looking at or in the money calls. Beautiful. And so let's see where the zones are. And it's not just a Friday thing. I would like to be long Google. Absolutely. That's something that's been on the watch list for sure. All right. Next up is ENPH. All right. So monthly to daily. I'll tell you what, EMPH, I do not look at monthly charts. I don't see their function for us as traders, right? Weekly is really more of the longest time frame that I'll look at, and that is for time horizons of months, if not years. We have some weekly positions that we've bought in the Sector Secrets Mastery at this point nearly 2 years ago. And those are trades, some of those are still open. For example, XLK. But those are really position portfolio entries where I'm looking to hold them for years, if not a minimum of about 6 months. So the daily would be where I'm focused. The daily has an uptrend. Beautiful green candles. Take a look at the structure. Both the momentum and the trend are bullish. And that would mean if ENPH can pull back to aggressively, say 124.80, or if it wants to trigger within my mean reversion zone, I'd keep an eye on that from about 123.35 to maybe even 122 for a buy zone for ENPH on the daily. And again, this would be that slightly longer term time horizon in that 2 to 10 day window. I'd also focus on, as you mentioned, that was not your move. Sorry. I would focus on the July expiration. June, at this point, the June 21 expiration, not really where I want to be for longer term swings. Definitely going to roll out to something beyond that. Now, look, if there are weeklies in between with sufficient open interest, feel free to do that. I wouldn't go any closer than 14 to 21 days on a daily time frame setup, but that's definitely something we can keep an eye on. All right, next up, XLU and XLP. Jazz, I'm looking at XLU and XLP purely as defensive plays. And the more strength that we see in tech, which is a big reason why the S&P and the NASDAQ are up so strongly, there'll be less interest in defensives. Now, I'm not saying that's a no, but just remember that the stronger the S&P and NASDAQ are, if dollars really are attention and flow of dollars is revealing that intention, you'll notice the more the S&P and the NAS have really gained traction, XLU and XLP have really lost a lot of traction, haven't they? However, yeah, they're still quite viable, and it won't take much to maybe get S&P and NAS a little shaky, since it is very much a small number of stocks keeping it as strong as it is. So I would wait for the daily price movement range. It's no longer a trend, so no mean reversion. In fact, take a look at when we lose the trend, which we don't have, right? When we lose the trend, so too do the lines of the mean reversion, right? They disappear. And that's by design. So I'm not distracted by something I really shouldn't be doing without the confirmation of a trend. So daily price movement range, buys, long calls, absolutely. But I'd probably be a little bit more hesitant about them. They've kind of fallen down the list a little bit for me. I would say within the XLP, Walmart is a little, so if we can look at index sector stock, or in this case, sector stock, I'd probably say, rather than going with XLP, how about a relative outperformer within it with Walmart? And, that watch list building process, which is such the the basis of so much of what we do in the sector secrets mastery, that would extend to utilities as well, where maybe, maybe not XLU, which by the way, doesn't always have great open interest. Maybe it's going to be something like Southern or Dominion or Duke. I'd say Dominion's off the list. Duke, probably not great. NEE. So I'd say Southern. Southern's really going to be the individual stock, the individual boat within that tide that I'd focus on. So I'd go a little bit more specific to the stock that's relatively stronger than, right, that sector. All right, next up, Green Eggs and Ham asks, what is the blue line on the daily? What is the blue? That's an anchored VWAP. Green Eggs and Ham, that's an anchored VWAP, an anchored volume weighted average price. All right, so that's what we have right now. Let's take a look at what else we have going on in these sectors. Let's take a look at the Dow. Now you'll notice I'm not talking about the Dow from the same perspective that I'm looking at the NAS and the S&P. Remember, the broader averages do not have to move together and often will not move together because the weighting within them, the sectors, the stocks are different, as is the weighting of the sectors and stocks themselves. So Dow is not somewhere where I'm really all that interested in. It's not benefiting from the strength at the stock level that we're seeing. Same thing goes with the Russell. These are two very heavy indices. And just because the S&P and NAS are moving higher doesn't mean the Dow is necessarily going to benefit. So we definitely want to keep that focus on where the index sector stock alignment is best. And that brings us to Amazon. Does it look good to the downside? I would not be a bear in Amazon, although it's really choppy. So if you're talking about setting up something to the downside, I would tell you, here's two ways to look at it, JP. One is the structure on the 1 hour for a short-term swing. This is, we talk about buy the dip, right? This would be sell the rip with a shorter time horizon. And that means also less time to expiration. Yeah. So you don't have to buy as much time. Remember, time on the option is part of cost. Yeah. But if you're looking at the daily, as long as the candle is yellow, not green, I can look at resistance in the daily price movement range. But largely what I would say is use the 1 hour for any short setup, since you're asking specifically about the downside. But if the downside carries us to the daily price movement range, this is where I'd be looking at long calls. So you notice how having two choices for swings gives me a short term and a long term. And it also gives me a little bit more flexibility depending on the structure for possibly long puts on one shorter time frame here and possibly calls on the other. Right. So this is where we want to use each time frame on its own. They are unique, right? They are unique. And that will open up possibilities for us as long as we understand their job, right? What is my take on American Express? It's, most of financials I have very little to no interest in right now. I don't want to be bearish in financials generally because the S&P is strong, but the Dow is weak. So there's two choices here. Yeah, I mean, where we're plotting red candles like in American Express, yeah, we can take advantage of where the red meets the gold. Yes, right. And this, by the way, this crazy candle was the Federal Reserve. That's the FOMC Wednesday. Right. It was FOMC Wednesday. Just double checking. No, that was the day before FOMC. That's the day before. So on American Express, you can be bearish, yes, and look at long puts within the gold zone as long as the candles are either yellow or red. That's the color coding that we use with top tier. So there's very little guesswork for that. All right. Okay, gang, and just like that, I've run out of time. And we'll be back on Monday for Charts and Coffee at 9 a.m. On Sunday at 6 p.m., I'll see you for top tier outlook at 6 p.m. Eastern. In the meantime, heads up, 10 a.m. University of Michigan data coming out. Be good to each other. I'll talk with you soon. Hey traders, Raghee here. Let's get a quick audio and video check in. Should be good to go. All right. Happy Friday, gang.